Hey, good morning. This is Mayor Valensky with Driving Markets. Just have a quick catch up what happened on Friday. So the big number out on Friday was the non-farm payroll, and that's been driving markets now for the last 7-8 years. On Friday came in better than expected. Well, since it came in better than expected, that calmed down all the investors, the traders and the banks that were not, and analysts of course, that were not going into recession, because it's very unusual, if ever has happened, that you have full employment and a recession. As a result of that, the market stabilized a little bit and oil went back up above $100 a barrel because it fell last week on the back of fears of recession, that there'll be less use of oil, less need of oil and lower demand for oil, and as a result oil crashed through the floor. However, it has creeped back up. I'm a big oil bull. By the way, I forgot to give the caveat. Anything said on this piece is a opinion only, so just keep that in mind. And if you do trade and make money, great. If you lose money, don't sue me. Sorry, I had to say that caveat at the beginning, but I've said it in the middle just to make sure I'm covering myself. Other things to look at. Lael Brainard. Wow. So she's the vice chair of the Fed. She's saying that there needs to be more regulation as regards cryptocurrencies. If you remember back in May, Terra USD, the stablecoin crypto, completely collapsed, and that sent shockwaves through the industry, causing further downward pressure across the board on all cryptos, especially Bitcoin, which is the market leader. But it looks like that Bitcoin and Ethereum have stabilized around about these prices, around about the 20,000 level. I still believe that the cryptos, especially Bitcoin, will fall to around 17.5 or maybe lower, but it looks like it's found a bottom at this level, around about the 19,000 level. Looks like that's the bottom and will hover and trade around these areas, so something to keep an eye on. Also this week you've got some significant major economic figures out. You've got the CPI in the States, the Consumer Price Index, which is the consumer measure of inflation in the US, and you've also got PPI, which is Producer Price Index, and that's also out. Both of them are supposed to come in slightly higher than the June reading. I think they'll probably come in a lot higher than that, so something to keep an eye on. Also, you've got the banks reporting this week, starting of the corporate earnings season reporting. You've got Wells Fargo, you've got JP Morgan, Morgan Stanley, to name but a few that are reporting this week. It'll be interesting to see where their profits are and what their forecast is in light of the first 6 months of this downward spiral in financial markets. But since interest rates have gone up, they should be faring quite well. Also, at the end of this month, you've got the FOMC meeting, which is likely to put rates up to by 50 to 75 basis points as regards interest rates in the States in their fight against inflation. The markets liked it last week when the minutes of the Fed came out and said, yeah, it looks like we are going to be fighting aggressively inflation. Also, you've got the Tesla Twitter debacle going on, where it looks like Tesla may pull out of the Twitter deal, and that will put pressure on Twitter. I expect Twitter by the end of the year to be around about $18 a share, at which then Elon Musk and Tesla will probably come in and buy it out again. But it looks like the $44 billion deal is at risk and may not go ahead, so that's something to keep an eye on. As regards going over the summer months, well, obviously the markets will be quieter over July, August. My forecast is that we are going to go on a continuing downward spread as regards equities, indices. I expect let's go talk about a bit of Forex. You've got the euro dollar under massive pressure. I think the euro is going down to par, or maybe even less, 98 to $1 as far as the euro is concerned. And I think the pound is going to go, pound against dollar is going to go down to about 115 to the dollar. It's under pressure. There's not a lot going on in the UK that's going to boost up the GBP, the UK sterling pound, unless interest rates go up significantly. And somehow, as far as Andrew Bailey is concerned, which is a disaster of a head of the MPC, Bank of England, I think you might have a 50 basis point rise in July, or in August, whenever the next meeting is, and you might have another 2 rises of 25 basis points. So you might have interest rates by the end of the year 2%. That's a big disappointment. I was really looking for 3.5%, 4% in the UK to fight inflation, but you can't expect anything from Andrew Bailey because he's very, very weak, very unaccomplished, and very incompetent, as been seen by his history on his CV. Anyhow, that's my little political input. Biden is visiting Israel this week. I hope he takes his script with him because he's going to get all confused where the heck he is. So he lands in Israel on Wednesday. And that's more or less it from Driving Markets. Hope you're well. You can follow me on YouTube. You can follow me on Twitter. You can follow me also on Instagram. WhatsApp me, subscribe, like. Speak to you soon. Have a good day. All the best.